We can call it a tale of two Dow 10,000s. Now, it was just 10 years ago, a little over 10 years ago, in March of 1999, that the market first closed above that significant milestone, and traders down here on the floor were passing out these Dow 10,000 hats in jubilation. And why shouldn't they be excited? The market was rallying, and the economy was rallying as well. If you think about it, the unemployment rate back then was at 4.2%. But you fast forward to today, and boy, have things changed. We're just under 200 points shy of hitting that 10,000 mark again, but everything else looks different. We know that the unemployment rate is at 9.8% and climbing. We also know that the dollar is at a significantly low rate over the past couple of years. But we have had some improvements. The Dow's been up 51% since hitting its low back in March, and that averages out to about $5 trillion worth of net added value that we've seen the market have. So the big question, Robin, is can we break through that 10,000 mark? What's important to watch is third quarter earnings are going to be coming out the next couple of weeks. We're going to be hearing from a slew of companies this week: General Electric, Intel, Johnson & Johnson, Goldman Sachs, to name a few. And what's important to watch, it's not that these companies just beat estimates, but that they actually are making money. They're actually showing revenue growth. They're not just cutting costs. And Robin, if we see that, then we could go through that 10,000 mark. But I have to tell you, that feeling of excitement 10 years ago probably won't be the same given the other environment with the economy.
You got that right, Bianna. Thanks so much. So what does a Wall Street rally really mean for the economy? Joining us now are Michael Santoli, senior editor of Barron's Magazine, and Liz Clayman, anchor of Countdown to the Closing Bell on Fox Business Network. Good morning to you both.
Good to see you.
Let's pick up with Liz, what Bianna was saying there. Yes, we did see it break 10,000, the 10,000 mark 10 years ago. Much different feeling this time around.
Absolutely. I mean, we've been here before, so that spark plug has been blown, definitely. But yes, you're superimposed over a very tough employment picture here. We have millions of Americans searching for jobs, trying to find better jobs than the ones they have that pay more. And we also have this situation with the stock market where 2 years ago we were at 14,000. So there has been a great psychological loss, but as we go forward, yeah, we'll probably hit Dow 10,000.
Right.
That seems like a milestone or a signpost that we'll hit, but it's what happens after that that truly matters.
That's what matters for a lot of people, as you alluded to, those especially who don't have a job right now. But we also heard, Michael, from Bianna talking about the earnings reports coming out. How much can we really trust them, though?
Well, we can trust the earnings are getting better than they have been, mostly because companies panicked about a year ago and into the early part of this year by cutting costs radically. And what this rise toward Dow 10,000 from below 7,000 in March really means is that 2010 should be a sharp snapback of activity for large global companies. The rest of the globe is already in expansion mode again. It's not necessarily meaning it's going to be a happy economy. This is the kind of stock market rally we've seen in, for example, 1929, 1930, 1938, 1974. 1982, not good economies, but sharply rebounding economies from a deep recession.
But when we look at these earnings reports, it's because they're slashing jobs. It's not because they're actually doing better business. So is it a true sense, Liz?
You just touched the nail right on the head and then smashed right through it, Robin. I don't think so. I mean, are you selling more widgets? That's the big issue. Or are you just cutting headcount? Are you canceling the coffee in the break room? I mean, these are things that every company should be doing when times are tough. And frankly, they should run lean so that when they run into difficult situations, they don't have to do this. But the point is, are they selling more product? And with this earnings season, we'll find out. But the consumer is down for the count at the moment. When you have what Bianna just mentioned, that 9.8% unemployment rate, people are snapping their wallets closed. They're not so quick to spend.
Lessons learned here that probably we could use going forward. But we talk about the unemployment rate, teetering right at 10% right now. So, I mean, when you factor that in, how much longer can the stock market do well?
The unemployment rate can't continue getting worse as the rate it's been right now for the stock market to sustain itself right now. But right now, it's about that initial phase when, okay, maybe we've cut enough or too much, and we get back toward that point after the recession has most likely ended, where companies say, okay, we overdid it, our profits are doing better again, we have a lot of cash. Large companies are sitting on a lot of cash. If you take the banks aside, which is a big deal, they actually have the means to spend and hire. The question is, going into 2010, whether they'll see the opportunity to do that.
Take the banks aside, you think about the stimulus money, you think about the Fed helping out. I mean, when that goes away, does it still stay a strong market.
Well, everybody keeps saying we'll go to 10,000. Yes, because this is a government trade right now. The government is propping up what's going on here with a lot of stimulus money, as you mentioned. The TARP, we've stabilized the banks definitely. So as long as that's in play, then you will see that March, whether it's in fits and starts or straight up, which is pretty doubtful. But we've had a great third quarter, as you saw. But yes, what happens when they have that exit strategy, which you know is coming eventually, but it will be orderly. You know that the government will put it into an orderly process. But yeah, at some point, while we do have the patient up out of ICU, walking around, still sort of lurching through the hallways of the hospital, crying out occasionally, is we're not that healthy just yet. So can we walk out the front door on our own? Not without the government.
But on going down that hallway, on the road to recovery, just a bit. Would you agree?
Heading in that direction.
Heading in
I
that
think,
direction.
yes.
You guys really want to? Well, things have changed. Things have changed. How you can look forward to that.
Exactly.
Got to be realistic.
Yes, we do. Liz and Michael, thank you.
Sure.
Thank you very much.